Well, good afternoon, everyone. Hey, it is Shooter. Hey, we're going to go over some swing trade notes, do a little market recap in the mix, just to throw that in there. At the end of our presentation, review our disclosures. I think the question is, will stocks continue their slide? I think that's really the question here. We need more of a sell-off. The shortest explanation I can give you. So I've got market conditions short-term bearish, which means 3 to 10 weeks, to bearish. Reason being, we get below a certain point, we're going to have a new little bear market. So that's just my thought on that. All right, so let's look at the dollar. One heck of a breakout. Now, right now, the shallowest count is a 106 that I have here from where we are, which basically is where we're at. We're within a buck of that range. However, some of the charts, or I showed one chart in major markets this morning that had us potentially pushing to about 120.25. That is hell, folks, when it comes down to stockholders or position traders. So my service, or what I do, is invaluable right now because swinging around the edges is going to keep you alive in this market if we turn into another bear market. That's nutshell. Simple. It's worth 10 times what we charge for it. If you like what we do, please sign on board. At least the YouTube videos, $1.99 a month. Typically, we do a couple of those a week. Good insight for you as well, though. All right, looking at treasuries. We're close to a bottom. I don't like the wedge. The wedge is lower than what the count's telling me at 89.35. So I still haven't made that decision yet. I'll get it next week. I'm stalking a position, but haven't added anything at this point. Now, I'm going back to bread and butter. The key here is in a bear market is to survive it, not make money. If you make money, great, then you're really good. So I like AVGO because it's still undervalued. When I first posted this, it was like $13.24 a share. As I wrote this article, it's $13.35 a share. So the thought is rinse and repeat. Sell cash secured puts right around $1,300 because I don't think it comes back and takes out this low. That's really what it comes down to. And our target's 1506. So to me, it's a safe place. On top of that, if you look at it with what happened in the markets this week, it went nowhere. So, it's the perfect place to park, right? Now, since we've identified this inflation in third world, dollars pushing up, okay, the structure is the dollar rises, it lowers inflation in America, but it increases inflation in the third world. So, and one asset class, it happens to be Japan, that looks really keen to having some upside related to asset allocation. So I think small caps in Japan is another very conservative. I don't expect it to go very far, So I see three paths. One, you scale common shares, right? Two, you buy at the money calls. You're going to have to do the monthlies on this because there's really not enough flow for the weeklies. So what you're doing is you're buying 2 months out. You're going to hold them 4 weeks, switch, rinse, and repeat, do the same thing. Part of the reasons I like doing that is because you still have a lot of premium in there. So if you happen to be wrong, it's not going to hit you that hard. So, typically it'll yield between 11 and 20%, just flipping in and out of those monthlies. And ultimately, we do have a breakout line up overhead around 85. But honestly, it could take us all year to get there, to be very candid. This, again, I'm going back to my conservative nature in these market conditions. And hey, safe places. I see this as being a safe place. So that's why we put that in. Okay, now Google. I really like Google's chart. We got a breakout. We're in the midst of a breakout in a primary wave 3, right? It's got some nice FOMO. We were thinking it was going to break down here. It held up. Really, I screwed up and didn't post it sooner. At 130, I should have, but our upside is about 172. So not quite $25 to the upside. So I see you as having 3 options. Again, common shares, right? Continue to scale or buy at the money. You could probably do weekly or monthly calls with Google because it's probably liquid enough. So what that means is you're buying 2 weeks out. So you're buying like 157 calls. 2 weeks out. At the Thursday that after that first week is transpired, you sell them. Wait till Monday, right? Reload, do the same thing, rinse and repeat. So basically you're holding those shares for a week to capitalize on whatever upside there is, all right? Win or lose, right or wrong, doesn't really matter. It's going to be the law of averages. If you do it 6 weeks, you should be right 4 out of the 6 weeks, just looking at the current structure of the chart. All right. Same thing with the monthlies. You buy 2 months out, you hold them to the final Thursday of the month, right? You sell them wait till the first of the month, rinse and repeat. So you could use either strategy there with that concept. Well, that's what I have for this week, folks. Great trading. Until next time.